Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's the derivatives portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on today, Jim.
Drew, equity markets rallied to their highest weekly close on Friday. Then we got the Trump tweets about Chinese tariffs. Apparently those are going to kick in on Friday. Where's this going to hit the market? Because the Chinese are also talking about some kind of retaliation.
Yeah, I mean, if you just take a step back as of the Friday close last week, you know, markets were closing at all-time highs on a weekly basis, U.S. markets, that is. Everybody was, you know, very happy, very enthused that, you know, a China trade deal was probably just in the cards, and it was just sort of the final steps needed. And then in true Trump fashion, we got Trump tweets on Sunday afternoon that really turned over the apple cart in that sense that, you know, he was going to go back to putting tariffs up on China. Now, these were originally tariffs that were supposed to go onto Chinese goods or raise the tariff from 10% to 25%. That he didn't do because him and Xi had a good face-to-face meeting. However, the negotiations were dragging on too long for Trump's liking, and as we found out more, apparently the Chinese side was backtracking on some of the commitments that they had already agreed to. So this is Trump, you know, taking a hard line in Trump fashion. Now the market, you know, sold off aggressively when we first got these tweets, followed through on the next couple of days. We sort of held in yesterday, not doing too much, sold off again this morning. So, you know, we do have the tariffs apparently going into effect tonight at midnight, so we're about 9 hours away from that now. So that is definitely a negative. That's going to happen, it looks like. I don't think there would be anything that would step in and change that right away. So you do have this market that's sort of living and dying on headlines, and quickly moving percent or so on those sort of trade headlines and looking for direction. But again, I think it's important that we take a bigger step back. And I mean, we've had a volatile 6-month period from the October highs that we saw at the end of last year, sold off down to the Christmas lows, and have now rallied back up to new all-time highs. You know, if you're you know, not a trader and you're investing in this market, I have to think that you want to be taking some risk off the table at this level. I mean, we're still at very high levels, S&P not that far away from 2,900. So, you know, your continued upside to stay with it from here is going to be a lot riskier. You know, we do have a central bank that is, you know, also helping push money into the asset prices, into stock markets. But at the same time, you know, the bigger picture right now does seem to be more on the political side. Are we going to get this trade deal? And right now, you know, I think we were, you know, more pricing in the fact that we already had it or thought we had it. So if that unwinds at all or even just drags on, you know, again, I think there could be some more downside in prices.
Also, after record highs, don't you usually see some profit taking, so it's not unnatural for the market to dip?
Yeah, exactly. And I think that is a great point to make as well. I mean, with the S&P up on a year-to-date basis, now, again, that was coming off a sharp sell-off at the end of last year, up over 17%. You know, for most people, if they could make 17% in a year, you know, they'd say thank you very much and move on. So I mean, the fact that we came from lower levels, a lot of it was making up what was lost at the end of 2018. But exactly, you will get profit taking at new all-time highs, people taking a risk off the table, saying, thank you very much, this has been a great move. There's more uncertainty going forward. Even if they saw this coming or didn't see this coming, taking money off the table at the highs is never a bad move.
Also, in my previous interviews a few weeks ago, I was asking, are we setting up for the traditional sell in May and go away?
Yeah, I mean, that's always a market dynamic. Markets usually tend to go into a quiet period later in the summer as different holidays take effect. People are out of the office, taking their families on holidays. So you do tend to get, maybe the more aggressive players in the market are scaling back positions. Things can get a little quieter. Again, if you've had great gains for the first part of the year, selling while you're away on your summer vacations, not able to watch the market, see what's going on, just gives you a peace of mind. So that can come into play. Again, it's going to be different year to year, especially when you've got these extra circumstances going on with the market right now. But at the same time, it does seem like the run-up that we got through the start of this year, even though it was a strong momentum move higher, is sort of running into a confluence of issues that is seeing the market sell off a little bit more now.
Would it be a mistake then just to take the cautious side and not worry about where the U.S.-China trade talks are going?
Yeah, I mean, how do you know where that's going to go? To try and, plan your portfolio thinking that you've got a clue, I think is just, a game of hope, and that's not really a great strategy to have when you're planning your investments. So I think you have to maybe assume the worst, plan for that in some degree, but trying to say, hey, I want to stay fully invested in equities because, if a deal gets done, we could, jump up from here. What if that doesn't happen? So I think the more cautious, more risk-averse clients should be definitely pulling more out of the equity markets. I'm looking around at the bond market, from bonds, the move that we had higher from October of last year, really didn't move back like equities moved back to their highs. Interest rates have stayed quite low. So the bond market is still telling me a little different picture about where central banks see, the global macro picture, not just whether or not a trade deal gets done, but, slowing economies. And I think that slowing economic backdrop paired with the risk of a trade deal or no trade deal is where you see even more risk in equity pricing and the multiples that people are willing to pay for equities.
We'll have more with Drew Zimmerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, given that we might see a defensive sell-off in equities, where do you see the bond market going?
Yeah, as I just touched on, Jim, one of the plays that I've had, just because I thought it was an easier play than trying to pick the top of a rising stock market was to be long the U.S. long bond. I maintain that position. I still think it's going higher. So I've got a few reasons why I think that. One, I think, U.S. rates being as high as they are, I think there's sort of a global gravity, if you will, if you call it that will pull down on U.S. rates. I mean, the U.S. 10-year rate and the Italian 10-year rate is only about 20 basis points apart today, and they had been closer. I mean, these are supposed to be, our risk metric. If you would rather give the Italian government your money for 10 years or the U.S. government for your money for 10 years, one, I think, should be paying you a lot more than the other, and that's just not the case right now. So I do think there is that sort of global pull for rates to come down. We've seen the Fed pivot in January, where the central bank's willing to be much more easy than we thought they were going to be through this year. I mean, at the end of going into the end of 2018, we thought we were going to get 4 rate hikes this year. That's just not going to happen. So an easier central bank will allow rates to come down. And then the sort of big move would happen if we do see more of a risk-off sentiment come into markets like we've seen this week. So rates getting pushed down on that as well. So it was an easier trade to be in than trying to pick a top in the equity market. And it's a trade that I think could still have a lot further to go. I mean, if you look through Europe, rates, even at multiple durations, are at negative rates. So, I mean, globally, U.S. rates are still quite high. I still think that has a bit of a draw for the U.S. dollar, and I think the U.S. dollar could move higher on a safe haven flow, like bonds would do better on that move as well. But I think this move in bonds, we went from, expecting rates to surge higher when the U.S. 10-year hit 3.25, and we've done nothing but go the other way since then. So that may have been just a bounce and a sort of a false breakout of this 30-year bull market in bonds, and we might just be continuing on with that bull market.
We'll have more with Drew Zimmerman right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, given that interest rate differentials are so important for currencies, what does that mean for the U.S. dollar?
Yeah, again, tying it all in, I mean, my view is I think we could see U.S. rates continue to move lower. So that will be, a lower incentive for people to move their money into U.S. dollars to obtain that higher interest rate. So, part of my view of rates continuing to go lower, and if they go much lower, would be a risk-off sort of a move that's a move down in equities. So I think that could still see the U.S. dollar do better on safe haven type flows, not caring so much how much you're getting on your money, just that you're getting your money back, that sort of a trade. So I think the U.S. dollar near term can still do better, but especially if we see U.S. rates move lower, again, given that international rates are already so much lower, on a percentage, if they both move the same percentage, the number of basis points move in the U.S. rate market is going to be a lot bigger than anywhere else in the world. So that differential would work against the U.S. dollar. I think then if those safe haven flows were to slow down, then you could see some weakness in the U.S. dollar going forward. So I'm watching my interest rate differentials closely. A lot of the times they are a key driver of currencies. they've backed off some of their correlations recently, and I think that might continue a little bit longer, but then I'd definitely be cautious to see those correlations pick back up, and that could give us some U.S. dollar weakness.
The U.S. dollar is so key to so many markets. How will that impact different commodity prices or gold prices?
Yeah, I mean, the U.S. dollar is the denominator as we go through the commodity markets, so we see many commodities, especially some of the ags, again, some ties to the China trade deal issues, but ag prices being very low. But we've also got the U.S. dollar still very near, multi-year highs. So I think a stronger move up in the U.S. dollar would continue to pressure commodities. Gold right now is sort of a mixed bag. I'm going back and forth. I mean, if rates are going down, that's real rates moving lower are likely going to help gold move higher. If the U.S. dollar goes up, but that hurts gold normally. But if the U.S. dollar is going up because it's safe haven flows, then gold might actually get a bid there as well. So gold's sort of in no man's land a little bit for me right now. I would love to look at it or look at getting long gold closer to the 1250 level. We've been sort of hovering around this 1270, 1280, maybe up to 1290 level, but not really breaking higher on any of this risk that we've seen this week as well. So I'm staying on the sidelines of gold, looking to get long over a medium to longer term basis, but still want to do that at better prices, and I think we could see those coming.
Now, there's some controversial ads that started this month that say gold is old and clunky and belongs to dinosaurs. Put your gold, throw your gold out and invest in Bitcoin. Would you do that?
I'm not doing that, mind you. I'm also not buying gold yet either. So I am watching Bitcoin prices. I mean, today alone, Bitcoin futures back over $6,000. That's a price benchmark we haven't been to in some time. But again, you're still hearing. I mean, it is from time to time of these hackers get a hold of a significant number of Bitcoins on the exchanges. So, I think they both serve as, we are the non-fiat currency sort of trade. Which one, gets more flow going into it may be that sort of self-fulfilling prophecy of whichever one gets the bids first, gets more bids overall. Also, I think there is something to be said about the generational aspect of it. The younger generation, doesn't remember the large moves higher that made people a lot of money in precious metals. Ever since the last decade almost now, gold prices are just declining. So, Bitcoin, made millionaires in the last couple of years. I mean, it also lost people a lot of money in the last couple of years. But again, it was some price action that we haven't seen in gold for the younger generation. So if they're looking to say, hey, I want to put my money somewhere that isn't a fiat currency that I know could possibly, go back higher, maybe Bitcoin's the higher beta. It's a little more exciting. It's a little more hip and popular. I mean, I feel like an old man using that term, but it definitely does have, the more recent outperformance going for it. So I'm a little bit undecided on that. I might even allocate money to both. But the one I'm looking at more seriously near term is gold for myself. I think that's just still a safer play. I don't want to get out of a risky market or a market I think is risky, like equities, and then put it into something like Bitcoin that can, easily move several percentage points a day, and have some wild swings in it as well. So the idea would be to scale back on some risk, not take a whole lot more.
Also, May 7th, the Chinese government banned the mining of cryptocurrencies, but like so many of their laws, some they enforce, some they don't. So, you also are at the whim of governments. They could turn off the crypto tap any day they want.
Yeah, I mean, there's a lot on the mining side of crypto, I mean, stronger computers, faster computers that are more efficient need, I think, still to come in to make the market that much better. But at the same time, the beauty of crypto, or the supposed beauty of crypto, is, you know, the governments won't be able to dictate it. So, you know, the Chinese government saying, you know, yes or no to something may or may not impact it. It may or may not embolden it. You never know how those things work, but it'll just be another thing to keep an eye on when we're watching Bitcoin prices.
Yeah, well, yeah, don't forget the Chinese government has millions of people monitoring internet activity, so you know that they are keeping an eye out for anything that relies on computers and the internet.
Yes, they have a much tighter control and have a greater ability to turn off access that we have here in North America. So, and the population to boot. So, very important, just because of the scale, and as you say, that controllability and the monitoring that they are doing. But again, you know, I always like to think that the price will tell you the story that it wants to say, and, you know, as a lot of things seem to be in this world, the thing that you can't have is what you want more, and maybe you're willing to pay more for it. So maybe that actually helps Bitcoin prices more in the end, unless, like you say, accessibility is cut off to such a degree that it's not even possible.
Drew, thank you so much for chatting with us.
Thanks for having me on again this week, Jim.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our YouTube channel is Talk Digital Network. If you have any questions for Drew or any of our other guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.